Stock investing is not for the faint of heart. It requires research, patience, and an understanding of what factors can drive a stock's price up or down. However, like any other type of investment, there are some stocks out there that offer incredible returns, and these 5 fit that description perfectly. AstraZeneca. AstraZeneca Plc is a global, research-based pharmaceutical company headquartered in London, England. AstraZeneca has a market capitalization of $171 billion and employs over 50,000 people worldwide. The company has operations in over 100 countries around the world and operates through 3 segments: innovative medicines, established pharmaceuticals, and animal health. The stock has a dividend yield of 2% annually as of February 2019. Steel Dynamics. Steel Dynamics, STLD, is a leading producer of flat-rolled carbon and alloy steel products. The company has been in business since 1986, and it currently serves customers in more than 30 countries around the world. The company's strong balance sheet makes it well-positioned for growth. In addition, it has a high return on equity, ROE, which indicates that management is doing a good job managing their assets. Steel Dynamics trades at a discount to its historical average due to concerns about global trade policy and an oversupply of steel. However, these fears have already been priced into the stock price, so buying now could be rewarding if these issues don't come to fruition or resolve themselves quickly enough for investors' tastes. AutoNation. AutoNation is a car dealership that operates across the United States. It's one of the largest auto retailers in the world, with more than 300 franchises and $18 billion in revenue. AutoNation has a market cap of $7 billion, and its stock price has been on a roller coaster ride since the recession, but it's been steadily climbing in recent years. AutoNation is not a stock you should rush into investing in. It's still risky enough that you should think very carefully before putting any money into it. However, if you decide it makes sense for your portfolio, then AutoNation can be a solid investment option with plenty of potential upsides over several years to come. Apple. Apple is a great choice if you're looking for a stock to invest in. Since Steve Jobs first co-founded Apple, it has grown into one of the most powerful and profitable companies in the world. Apple's stock has performed extremely well over time, and its price continues to rise steadily. It currently has an enormous market cap of $256 trillion, making it one of the largest companies on Earth by capitalization. Given these factors, Apple clearly appears undervalued by traditional metrics like price-to-earnings ratio, P/E, and price-to-book value ratio, P/BV. In fact, Apple trades at less than half its book value per share. Monolithic Power Systems. Monolithic Power Systems, MPOR, is a global supplier of power conversion products that enable the efficient delivery of electricity from renewable generation sources to end users across a wide range of power applications. Monolithic's product portfolio includes silicon carbide, SiC, IGBTs and diodes, SiC MOSFETs and diodes, SiC Schottky diode devices, and SiC drivers. The company has a strong balance sheet with low financial leverage and minimal debt levels. In addition, its operating margins are high at 50% over the past 3 years, while its dividend yield sits at 4%. This growth in profit margins, coupled with an increased demand for energy storage systems, should allow MPOR investors to receive higher returns than others in their industry sector over time. Now that you've watched this video this far, subscribe and leave a comment saying I subscribed, and I will personally reply to your comment. Now, back to the video. What do you need to look out for when buying stocks? In this section, we'll discuss some of the most important issues to keep in mind when buying stocks. Look for companies with a long history of growth. Look for solid balance sheets and cash flow. Look for great management teams that are committed to their company's success. And it must also have strong track records of increasing shareholder value over time by investing in growth opportunities, or by paying out dividends when appropriate to do so, which is usually when there isn't a better use for capital. Look at competitive advantages that can be sustained over time, specifically those that aren't easily copied by competitors, for example patents, or those that require large amounts of capital investment by other businesses before they become viable threats, for example airports. Conclusion: these 5 stocks are great candidates to add to your portfolio. But before you dive in, you should do some research and make sure they fit into the investment strategy you've created or the goals you're trying to accomplish. If not, then these investments might not work out for you. And that's it for this video. Thanks for watching.